one amongst the top 50 of the banks. Where exactly that ranking will be is difficult to give right at this point of time, because it depends upon both the tier 1 capital as well as the asset size. And so as of last year, we were, I think, at rank 52 or 53, and that should probably go up, and we should be amongst the top 50. Now, we will also then be having a total of 23,899 branches, and the number of our people will be around 271,765. So that's the physical footprint that we will have. On the balance sheet size, as of September of this year, that is, not September, December of this year, the deposits, the consolidated deposits are in the range of 26 lakh crores, 26 lakh 4,473 to be precise, and the advances are to the extent of 18 lakh 76,727 crores. The consolidated balance sheet size of these 6 entities is 32 lakh 18,498 crores. So by all accounts, we will definitely be a very major bank, and hopefully with this we will be in a position to ensure that we are able to render much more efficient and productive, much more efficient services, as well as be much more productive in every single way possible. I would also like to use this opportunity to welcome all of the customers of these 5 associate banks. We intend to take extremely good care of all of them. I would also like to welcome all of the people who are employed in these 5 associates. We look forward to welcoming them into the SBI fold. And we do believe that we are creating a very strong and a very and a bank with a lot of strength as well as a lot of cutting-edge technology, which will be fully prepared for the kind of competition that we expect in the future.
Ma'am, hi, Rhythm from CNBC. Any wage-related issues with the unions that have been raised earlier, are they all resolved? How will that progress as you take on the merger?
Well, at this point of time, really speaking, there are no wage-related issues. As you know, and the finance minister has also asserted yesterday that the wages that people receive as of this point of time will all be protected. All of the associate bank people will be offered the wage package that our people have for the relevant grades. It's up to them to either accept that or retain whatever package they have right now. They actually have a choice to do that. So I do not think there will be any wage-related changes.
And the immediate synergies that come out of this merger, if you could spell out for us in terms of both costs and the efficiencies and advances, etc.
Well, synergies are quite a few. If you can take into consideration the fact, the first synergy is that there are many overlaps because these were all running as individual banks. So the first things that will get merged are the treasuries. So we will no longer have 6 treasury, we will have 1 treasury. The second thing will be, of course, the local head offices. Some of these head offices will continue to operate as zonal offices, but some of these head offices will get rolled back if they are in the same center with the head office that we already have. So to that extent, quite a few of the admin staff, the administrative staff, will also get released and could be redeployed into direct operations. Similarly, with the large advances, where they are part of consortiums, obviously those limits will get taken over by us, and the people who were looking after those accounts would be then released for looking after new business or some other kinds of business. So the synergies are absolutely immediately visible in respect of the treasury, the admin offices, the branch network, the large accounts. So all of that is definitely something that's going to help in bringing in efficiencies and bringing down costs. The other area where we will also be more efficient is the fact that the accounts themselves, we will not have to maintain 6 sets of accounts, not have 6 sets of auditors. So all of that will also become one. So also in respect of IT, we will not need 6 sets of licenses. We will also be able to do a single rollout for all of them instead of individual 6 rollouts for every product that we do. So there will be a lot of efficiencies. Regarding the exact numbers, and I know the media has been asking me repeatedly for specific numbers, I think we need to wait for that a little bit more, let the actual merger happen, and then definitely we will try and give some idea about the numbers that we are looking at.
Ma'am, so synergy would be one thing, but with respect to the capital position, what is the estimate as to what the capital adequacy ratio will be at the end of it? What kind of assets do we have that you could classify, for example, real estate assets that would impact the overall capital adequacy ratio? And also, what would the shareholding be for the government at the end of it?
The government shareholding at the end of the day, I have to work out. I haven't really worked that out. But you must understand that out of these five, two of them are fully owned by us. And in the rest of them also, the public shareholding is not very large. So to that extent, I think the government shareholding will actually go up, not down. If you ask of the CR, the capital adequacy ratio, if we look at it as of December 31st numbers, that will be at 13.19, and this is not taking into account the 79 basis points of further addition that we would have made had we taken into account the fourth quarter infusion of funds by the government as well as the retained profit that we have. So if you look at it, it will still be very close to 14%, and therefore, not really a very major worry for us. Regarding the real estate assets they have, that amount has already been revalued, and after taking the stipulated haircut, it has already been accounted for in their books. However, as I said, we are not very worried on the capital front. I think we have enough. And in fact, even if you look at the number that we need as of the March 31st, even if you, March 19th, 2019, even in that respect, I think we are well above the minimum stipulated level. And this is to be expected because when we are working out capital requirements, we have always been taking their capital requirements into account before telling the government how much money we need or projecting how we will go about coming up to that level. So because this has already been part of our calculations, capital-wise, I do not think we should have any special worries.
Ma'am, with respect to digital, I would assume that once the merger is completed, you'll be able to really roll out your digital initiatives that you're doing at the bank itself. But as we stand today, have you seen sort of slowing down in digital transactions once now the system is coming up to normal?
What we have seen is a fall off in the digital transaction numbers. I won't say that they are still far superior to what we had pre-demonetization. But yes, at the very height of demonetization, what we saw, those numbers have come off. And that is to be expected as cash comes back in. As you know, cash is very convenient to use and people do use it. So you really have to have some kind of incentives and disincentives to continue with this effort of digitization. So to that extent, yes, the numbers have decreased slightly. It is not very worrying for us. This is expected, but we still believe that we should be, we would be doing much better in the digital area than we were doing pre-demonetization.
And ma'am, what is the sense on asset quality for all the associate banks combined? Are they more or less now at par with SBI, that exercise that you have been undertaking since the merger was announced?
Yes, more or less they are at par with SBI. Even if you consolidate all of the numbers as of December, as I said, the GNPA in that case, ours was at 7.23. If you put it all together, it will go up to 8.70. So it is not as though it will go up hugely. And as I said again, that we have been trying and ensuring that their provisioning levels comes up to our standards. That's been our emphasis in the last 3 quarters. It will continue to be the emphasis in the last quarter as well, so that by the time they come in, all of the provisions that they needed to have made, that will be made to the extent possible. I won't be able to confirm to you right now that 100% will be there. But yes, the aligning of the books has been going on since the beginning of the year, and I think we are more or less there.
And ma'am, is the entire cleanup of balance sheet done with regards to the associates and the merger?
As I said, we are almost there. I can't really tell you until we actually sit there and do the audit that it's completely done. But I would say more or less it is aligned. And yes, to the extent that we have been able to identify any accounts that may need to be classified, it has been done so that our books are in sync.
And what will be the capital needs of SBI for the merger, and how will it impact your capital ratios?
I just completed that question in very great detail. Probably you were not there. But as I said, if you merge the balance sheets as of 31st of December, our capital ratio, which was at 13.73, would come down to 13.19. So I don't think it will be very bad, in the sense that we still have, as I said, around 79 basis points that we have not accounted for in this capital, being the amounts that the government has infused in the last quarter, as well as the profits for the year.
And the board approval was sought and received for the merger of the 5 associate banks and Bharatiya Mahila Bank. What was the conversation that happened between the government and the bank, and why did they decide to put that on hold?
This is something actually that I am not really aware of. The proposal had gone for all 6. These 5 have been taken separately, maybe because they are at the end of the day associate banks of ours, and the other one is an external bank. And maybe the proposals were handled separately because there are 2 classes of banks. Having said that, I am not really sure exactly when the other proposal will be considered and what would be the end result of that.
Ma'am, any word on the Bharatiya Mahila Bank?
No, I just asked that.
Sorry, I missed that question. Also, sorry, one question on the costs of the merger. How much have you incurred so far, and how much more are you likely to incur by the time you close it?
Actually, the costs, we have not incurred a very great amount till now. Because we have done most of the work in-house. We have not had any consultant for this purpose. And going forward too, I don't really see that there will be any enormous costs. In fact, the cost should be only saving. The costs, some of them of course will come on account of the fact that there will be shiftings and there will be some amount of closures, some amount of openings. So there will be some costs, but at this point I don't think it will be very huge. Whatever was required in the way of costs in respect of the HR piece, we will have to have a look at that as we go ahead. But again, I believe that it would not be over much, and that we are well we have planned it well, and we shouldn't see any major impact on that.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.